Look at this chart. This isn't a correction. This isn't a dip. This is panic. As we speak, Bitcoin has shattered the $85,000 support floor. It is trading as low as $82,000 this morning. We are seeing the highest search volume for Bitcoin crash since FTX. If you are holding crypto, tech stocks, or any risk asset, you are probably terrified right now. You're asking, is the 2025 bull run dead? The answer is complicated, because what happened in the last 24 hours wasn't just market movement. It was a calculated execution. We had a $1.3 billion whale liquidation. We had a historic exit by BlackRock and a silent pivot by the Federal Reserve. I'm going to show you exactly who sold and why they sold, and why the price you see might just be the beginning of the pain. Welcome to the crypto winter of 2025. First, we need to address the elephant in the room, or should I say, the whale. For the last 6 hours, Twitter has been on fire regarding Owen Gunden. If you don't know the name, you should. This is an OG wallet. We are talking about Bitcoin mined and bought in the early 2010s. Dormant, untouchable, until this morning. On-chain data confirms that the Gunden wallet didn't just sell some coins. He capitulated. He liquidated his entire position, approximately $1.3 billion worth of Bitcoin. Dumped in a single market-moving event on Kraken. When you dump $1 billion of spot Bitcoin onto a thin order book, you don't just lower the price, you trigger a cascade. That initial sell order smashed through the buy walls at 90K, which immediately triggered the liquidation of over 400 million in longs. It's the domino effect. The price drops, the margin calls hit, the forced selling happens, and the price drops further. Retail investors see this and think, if the guy who held for 12 years is selling, what does he know that I don't? That is the psychology of fear we are seeing right now. But here is the scary part. Owen Gunden didn't sell by accident. He sold because the macro environment just shifted beneath our feet. For the last 6 months, the entire bull market narrative was built on one promise, that the Federal Reserve is going to cut rates in December. Well, wake up. That narrative died yesterday. We just got the latest CPI and hiring data. Hiring is solid, but inflation, it's sticky. It's stuck at 3%. And because the economy isn't breaking, the Fed has zero reason to cut rates. The market is pricing in the odds of a December cut at just 33%. Do you understand what that means? It means the cheap money liquidity pump isn't coming. High interest rates are like gravity for assets like Bitcoin. When you can get 5% risk-free in a money market fund,
why would you hold a volatile digital coin that just dropped 20%? Big money isn't stupid. They see the writing on the wall. They know the pivot is delayed, so they are fleeing to safety. And this brings me to the final nail in the coffin. Remember the institutional adoption narrative? The idea that BlackRock and Fidelity have diamond hands? Wrong. Yesterday, BlackRock's Bitcoin ETF posted its largest outflow in history. We are talking about $523 million pulled out in one session. This destroys the store of value argument. Institutional investors treat Bitcoin exactly like a high-growth tech stock. When the Nasdaq sneezes, Bitcoin catches a cold. And right now, the Nasdaq is doing more than sneezing. Look at Nvidia. Look at Oracle. The AI bubble is deflating. Asset managers are de-risking. They're selling their winners and their speculative bets. They're covering losses and moving into cash. Bitcoin is currently trading with a high correlation to the AI sector. If Nvidia keeps dropping, Bitcoin is going to get dragged down with it, regardless of the halving, regardless of the tech. So let's look at the math. Let's take the emotion out of it. We are currently sitting at $82,000. We have sliced through the 50-day moving average like butter. The next major technical support is the line in the sand, where the bulls must step in.
That is the $74,000 to $78,000 range. This was the breakout zone from early 2025. If we lose 74K, there is very little air between there and 60K. However, look at the RSI on the daily time frame. We are deeply oversold. Historically, when we see capitulation candles this big, fueled by a specific whale event like the Gundan dump, we usually see a dead cat bounce, a sharp, fast recovery to 90K that traps retail investors into thinking the bottom is in before the slow bleed continues. Here is the verdict. If you are a long-term holder looking at 2030, today doesn't matter. You've survived 2018, you've survived 2022, this is just Tuesday. But if you are a trader or if you need this money soon, listen to me. Do not try to catch a falling knife. The market is currently digesting $1 billion of sell pressure. That takes time. We need to see the price stabilize. We need to see the ETF outflows stop bleeding. My strategy right now, I am sitting on my hands. I am holding cash. I am waiting for the market to decide if 78K is the floor. The crypto winter of 2025 might be here, or this might be the final shakeout. But until we get clarity on the Fed, cash is not trash. Cash is a position. Stay safe out there. Watch the 78K level, and don't let the panic make your decisions for you.